Now let's look into the Philippine Stock Exchange Index. If you were to compare us compared to the rest, I think you can see a much heavier decline being shown by the PSEi as compared to the S&P 500 and compared also to German DAX, which we looked at earlier. And this pullback that we're seeing in the PSEi has been quite heavy, so much so that it's already gone down below 5,000, and these are reaching levels that nobody had dared anticipate in terms of its magnitude, clearly because of the black swan event that we're currently looking through. If you were to look at its foreign neighbor, which is EPHE, or the MSCI Philippine Index here on the right side, I just want to show you that the damage here was quite severe. I mean, after breaking down from this support shelf that we've seen, it just literally dropped like a rock. And in fact, it's already almost closed in on a low that it hit back in 2011, which is closer to about $19.92. So again, I really hope that this major low that we've seen back then can also provide some lift into the short term and maybe allow prices to be able to make or stage some sort of recovery. If that can actually happen, it may be able to help our local index try to do the same. So, these thresholds we're seeing right now should prove to be quite crucial, and I hope that some degree or element of support can actually come in to foster some demand back. Now let's have a look finally at the Philippine peso versus the other Asian peers that it has. If we're looking at the peso dollar rate here on the left side, looking at the relatively 1.5-year picture here, you can clearly see a downtrend still manifests itself in the into the peso dollar rate. As this heads down, that means your peso is still firming against the US dollar. Although in the last few weeks, you've noticed a big area pattern over here, consolidation, which broke on the upside. It jumped very quickly. It did it for about 2 days, and then quickly fell back down closer to 51 right away. So far, this firming trend of the Philippine peso is still quite intact. Although, yes, in the short term, it might probably need to be able to wind up a little bit more, and let's see if it will attack that 51.75 resistance again. But so far, there's been no change of its trend, and so far that would mean that there should be no problem so far into the movement of the peso. Now let's look at the peso compared to some of its other Asian currencies. And if you were to look at it, the peso is this black line that you see here. And compared to that, you will have, of course, the euro here right above it. You will have the Indonesian currency. You also have your Indian currency and the Thai baht. Now, if you notice, the Indonesian currency has been the weakest. I mean, it's actually depreciated 16% of its value into this year, and so it's been quite hard hit. So far, the peso seems to be the more stable currency that we're seeing here, and that should be able to keep investments from capital flight, because it seems to be holding on in its ground, and that particular strength should try to be able to keep investors inside our country. So that's one of the good things we see so far. But unfortunately, the effect into all our index stocks have been quite material. If you look at the list that I'm showing you right now, this is the list of the PSEi 30 member index stocks. And you can see as you go towards the right, you will see how much of a decline that we've actually seen in the last 3 years since the 3-year top that we have actually looked at from these companies. And if you were to look all the way here on the right side, you can see some issues that are down maybe 60–70% already. And it's really because of that also that I feel that the markets are coming to a point of exhaustion. However, it's still looking for something to grasp on. Why? It's looking for a reason to rebound. The problem is every day you probably look at the news and all you hear is about more cases of coronavirus patients increasing. And that keeps a lot of people at bay. And what's happening right now is a lot of this discount we're seeing to the fair value of companies have been grossly overdone. And I think sooner rather than later, we're probably going to get some interim rallies that you'll probably look at, something that can try to be able to decrease much of the variations we've seen in the price and the variances from the tops. So hopefully that could be able to provide another trading opportunity. As you can see, the PSEi index is listed here. At least it's about 47%, but you can see quite a bigger number of index stocks have actually gone down much more. And if you're wondering why that's the case, because a generous much of the weight of the index is actually because of SM and SM prime, and maybe one or two more of these lists, and that's the reason why, of course, that the index remains not in the middle of this band, but somewhere in the left side of this band. Okay, so let's get a little bit more technical here. So the PSEi index, looking at it through some of the thresholds that I wanted to be able to point out, I've run to try to estimate where next support levels could be. Now, please remember that these support levels I'm showing you were not even levels I was even looking at in the beginning of the year. Now, because of the Black Swan event, trends have changed. The capacity for the seller to hold has actually been very, very weak, and they've been selling because all they've been thinking of is playing safety. And because of that, we've had a very aggressive decline. So we've hit close to an intraday low of about close to 4,000 sometime last week. There was a little bit of a rebound take place, but the first support level should be closer to about 4,500, right? And so that's not really too far from where we are right now. Now, given the context of that, I really hope that this level can probably try to shore up some support first, and hopefully we can generate a little bit of a rally of maybe a pause pattern. But just in case this thing decides to be able to sink back, that 4,000 might be another area that it may be retested. Or if some panicky situation were happening again, I think a maximum output in terms of decline will probably look at about 3,300. Now, if you're wondering where did I get this number from, what I did is I drew a line to connect the two major bear market bottoms I've seen in the past. One towards the early 2000s, and the other one which we saw sometime in 2009, which is this one you see here. And after connecting those two lows, a major uptrend line seems to sit closer to that 3.3 or 3.4 level. So this, I believe, should be a level that, if we even hit this, should already be a very meaningful level for many of you guys to be able to start to be able to generate some risk back into the situation, because this is not going to stay too long below this area. It's only doing that because of this extraordinary time, and if we do get that chance to be able to pick up prices there, please don't let this opportunity pass.